Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple. And wow, I'm glad I sat around all day waiting for that. Dow up 17 points. Yuck. How ridiculous. Job numbers in the morning, move down, only to scream right back up again and then just chop sideways. So the markets gave us no indication of where they're going next. This still looks, if you're an Elliottian, corrective to me. Not impulsive necessarily at this point. We'll see. I really thought we'd reach these upper levels up here. Maybe even, I hope we don't. Well, I don't know if we'll make it all the way up to here, but this level I really thought we would reach today. Obviously, we have not done so. Maybe that comes early next week. Maybe not. This thing could turn around early Monday morning and go straight down. The markets literally gave us nothing to work off of today. It was 80 some odd degrees here in South Dakota. I missed most of the day because I was inside waiting for something to happen, and I should have just closed up shop and went home. It was just no reason to be around here. I did get a lot of work done, but anyway, just nothing given to us here in the markets whatsoever. This does look corrective yet to me, so I still think that my bias is actually for the short term neutral to still bearish. Regardless of if we go up a little bit more on Monday, I just think we're in for whatever pullback we're going to get, and that could be down here. It could be just down to here. Maybe it's all the way down to new lows. I don't know yet, and that's actually what I'm really excited to find out because that'll give us a lot more indication of where the markets are going midterm as opposed to just what we're looking at short term. So on a daily, we've had a very nice run since we bounced off the 50-period moving average. You can see how that held very nicely on the Dow. So going forward, if we're going to roll over and move back down here, we need to be aware that this has been strong support. So we're going to watch this going forward. I'll do more on that this weekend. I really just want to do a quick video for you on a Friday to give you a taste of what went on. Here you can see us right back up to resistance. Look at these little teeny tiny candles all the way back up. This is, some of the stuff that just frustrates you if you're a trader trying to make some money in the market. And that's little teeny tiny candles. This is 60-minute candles. Yuck. So, but I will tell you this. I mean, overall, looking at this from a very quick view, this is bullish. This is an ascending triangle. What this is creating here is an ascending triangle, and that is a bullish formation. So we could see a break above this come Monday. We will certainly be watching that, and I'll be going over that again this weekend. NDX on a daily, coming right back up, though, into that area I told you about, where this would be a very defensible place to short. I really want to discuss more on that this weekend, so I won't get into it now, but I want to tell you how, and I did a video on it on slope, but I want to go into a little bit more detail about this particular area here over the weekend. NDX on a weekly. Now that we've finished the week, we can actually look at this, and you can see that we have another move back up in the markets, but look at the participation. Not much volume here. That's what you want to see in this particular case, because this could potentially be making a head and shoulders pattern. There's your shoulder, there's your head. Maybe this is going to create the right shoulder. Still way too early to tell. All depends on what we get next week. I mean, if it blows past all of this up to here, then obviously that's off the table, but something to keep in mind moving forward. SPX on a 60-minute, you can see us once we got up and above this 200-period moving average, it didn't let go. The 60-minute held it all day long, and it made for, if you wanted to take a couple bounce trades off of that, that actually made for a good place to keep reloading. So, you'd see it bounce off here and play it up and, move your stop up, and then as you got stopped out, wait for it to get back down there and play it up again. It really wasn't much to do other than that. Otherwise, it was sideways chop motion. Not going to make anything on that. Did manage to close below the 20-day moving average, though. So we've had this nice run up. We got back above the 50, right back up to the 20. So now we have retested all of this old support that was back in here. The 50 has not held, but look how we're coming up into, like the NASDAQ, kind of a confluence of resistance now. We have this lower trend line, and once we start the next day, remember the candle's going to start over here a little bit. Let me bring this in a little bit. That is really, really, really small. I'm even having to squint to see that. Better, better. So come Monday, the candle's going to start over in this area, which is going to put it basically right at lower trend line, overhead resistance, and the 20-period moving average. So I'm still looking at maybe a push towards 1075 or even 1080 maybe on the SPX. We'll diagnose that a little bit more this weekend. SPX on a weekly, same thing as we've seen on the NASDAQ, and that's a move back up here, back above this previous support. And now let's see where it goes in the future. We'll see if this rolls over and makes a head and shoulders as well there, or if it continues back up to retest this lower trend line. VIX on a daily continues to fall, down 5%. So we could see, we're going to watch this and see if it actually holds here, though. This is back to support, the 20 and the 50. Next area of bigger support, obviously, is right here. And as this VIX drops, so does the so do the options. So we want to watch those carefully. Seeing as how I am in some puts, I always like to watch the VIX then to see if I'm bleeding volatility. And but as this moves down, that is, bullish on the markets. That means fear is coming out of the markets. VIX on a weekly, this is what I really like to follow here. And look at this hard move up only to be reversed almost completely this last week. So now we didn't even, we did pause at the 20 for about a day, but by the end of the week, we were all the way back down to the 200 period moving average. So, if you're bearish, you really want to see this area start to kind of hold down in this area here and watch the VIX turn back up. That means fear's coming back into the market, and that would drive the market lower. Also, if you're in options, you want to ultimately see that too, because that really helps the premium on your options. Apple